Hello guys, glad to have you on board again. Today we're Tuesday, so this is the beginners levels podcast. So this one is for early traders or less experienced ones, or those who are just getting started with learning my strategy, or more intermediate traders who just want to consolidate their knowledge. Just as a quick introduction and just to remind you what the context is on those podcasts is, we're dealing with range trading. For a simple reason, yes, a lot of people tend to believe range trading is the most complicated stuff to do, as actually, yes, if you think, I would say dumb, because, alright, but let's say not as a trader, most of the time you get the wrong answers to a bad diagnosis. So the problem is, you might think as how you can control the market, and if you think about how controllable a market context can be, then definitely the range is the most complex one. But simply because you get the wrong diagnosis, all right? The problem is not controlling the market. The goal, what you should be seeking for, is definitely not controlling the market. Most likely risk managing, and the most risk managing structure, the easiest risk managing structure to get to is the range. All right, many people tend to believe breakout trading is the easiest way to trade. No, that's the most controllable way of trading, at least, like I told you, it's an illusion. You'll never control shit about the market, and shouldn't nearly even be a point. So I still see people endlessly looking for control. These guys never will make it out of trading, simply because the more they play, the more they lose, simply because they don't understand what's at stake. What's at stake is definitely not trying to understand, even though they desperately, blindly try to deal with it. So let it go with that need for control. Instead, try to control something you can actually have a little bit of control about, which is just statistical behaviors and statistical positive returns, which is simply risk managing. All right, like risk managing, call that the trader's language. How the hell would you evolve with other traders within a huge and complex trading community without even talking the fucking language? So first of all, learn risk management prior to anything else, and during that process you'll figure out that as you start to get to talk with other traders, like talking the same language, the goddamn risk management, you'll figure out that control was just an illusion, and that every trader somehow let it go at some point with those controls behaviors. So every trader's just dropped out of control. So whoever is trying to control is just not a trader. So that's a simple, like A plus B, or A equal B and B equals C, though A equals C conditions. It's simple as that, all right? I never ever seen a trader seeking for control. But instead, they all control a very decent risk management. So yeah, to me, it's a simple link we've got in there. Whoever I see trying to control the market, I like 99.9% chances know that they're probably not making money out of trading. Anyway, that was just a quick introduction. So don't misunderstand, all right? Generally, what you feel like you control the less is probably what you'll be able to control the most with risk management. I mean, I could hardly explain that, but yes, it's most likely counterintuitive when it goes to actual risk management versus the perceptions you've got. It's easier to deal with range risk management than it is to deal with breakout risk management. But most people will feel it the opposite, all right? You'll feel like breakout trading is safer, it's easier to get, but range trading, oh my god, that's fucking complex. How the hell would I understand this noise? Yeah, you're probably not going to understand noise, simply because understanding it just simply isn't the goal. You're not here to understand, you're just here to trade. And trading a range is way easier than trading a breakout. Not because highlighting the trade is easier, simply because avoiding getting into traps is easier. There are way more traps into breakout trades that there will be into range trade. Let me explain that. In a breakout trade, what can be the kind of misleading trades? Just think about it for a second, right? Like breakout trading, trying to trend trade the breakouts areas. So yes, they are trend breakouts, they're definitely great, and when you got one, then you're easily going to get filled with your target. Like trend trades are easy, fast delivering and stuff like that. All right, that's great. So you feel you can control that shit. But yeah, what's the drill? What's the problem with that? And the problem is that there is a shit tons of breakouts, and most of them are range breakouts or stuff like that. And if you get to trade them as trend breakouts, oh god, you're gonna lose some money, simply because breakout trades generally come with a negative risk-reward ratio or close to, meaning you're gonna risk more than you can expect to gather, which means you need to have a freakingly high success rate to be profitable. Problem, like I told you, beginners will face enormous amount of range trades, and they will get to trade them as breakout trades simply because they lack of experience and stuff like that. All right, being good at trading a context only comes with experience with those contexts, which means if you are somehow coached by an experienced trader who's going to tell you, all right, this breakout is a good one, but this one, no, don't take this one, right? Yeah, that's subjective analysis. The guy will tell you, you can do this one, but you can't do this one. Yes, but why? That's the big problem. Most coaches out there just do this, all right? But they're certainly not leading you to being independent. They're just assisting you and making you dependent, because if you trade without this guy, then you're never going to make it, all right? You trade with him or with her, all right? And you're fine. So that's the conclusion you'll get down to, all right? I can't get to trade without this person, because anytime I try, I'm not succeeding. And anytime I trade with him or her, and it works. Though, the conclusion you get down to is, I can't make it on my own, though I'm going to stay under someone else's control forever. I mean, god damn it, that's certainly not how you'll get to be trader someday. Trader is independent. You will be able to trade without anyone else. And if you feel like it's going to be any difference, then you're simply not heading toward trading. So, independence is absolutely necessary. Getting and being coached by someone in the learning process can be efficiently useful, but that's it. It's just going to help you making things faster, but certainly not is the end game. You need to get the hell away of whoever is teaching you trading at some point. Like I told you, I'm not talking to people I've been coaching for a couple years. After a couple years with me, normally you should be independent. So I'm not helping you anymore. After 2 years, god damn it, like, use your own wings to fly. But anyway, all right, I'm losing myself in here. Let's go straight to the point. So, breakout trades, easy friends when it goes to trying to understand the market, very false friends when it gets to risk managing, because lots and lots of false signals, and most beginners would just get into those traps like all the time with a negative risk-reward ratio. That's just the easiest way to burn down an account. So range trade, like I said, complex, noise. It seems like you can't control that shit, even though in terms of risk management, it's the easiest way you can do it. It simply needs a set of rules, like a simple set of rules like I told you, right? Breaking out of context, at least 61% retracement. All right, you're limiting the risk. You're simply not controlling shit. You're just limiting the risk of being wrong. But still, that doesn't go along just that set of rules. There are some contexts in which those rules will actually be met as well, and in which you can't be using the range trade. So this is what we're going to be talking about today. Because every market condition and every pattern I'm going to teach you has its own flows. Nothing is ever perfect. Otherwise, we will all be billionaires with some simple market tools to detect those conditions and trade them automatically. All right? Like I told you, the algorithms I'm working on right now will help you and assist you, certainly not be able to trade for you. Because most of the time, not most of the time, yeah, most of the time they'll be great, or they'll be doing some good work, but still, let's call that decent work, all right? But sometimes they'll give you false signals, simply because, as usual, if you think an algorithm can predict the market, you think you can control the market. So why the hell is fucking wrong with you? Nothing is ever going to be under control. So let it go with that simple idea. And try to understand that no matter what, range trade detection will do a decent job most of the time, but it will still trigger some range trades into contexts that are definitely not worth it, or at least that will never be profitable with range trade. Now let's try to think about it and think about that for a second. Just like I told you earlier, the breakout trades are the best enemy, the worst enemy of those contexts is the range breakouts. And problem, there are way more range breakouts than there are trend breakouts. So that's the flow when it comes to breakout trading. Now think about what could be the flow regarding range trading. Think about it. What kind of context will mislead you to a losing trade? That's the kind of context you'll think it is a range trade, you'll have the signal, and if you take that fucking signal, you'll most likely end up with a stop loss. Think about it. I want you guys to try finding this one on your own. If you do, then that's real great. If you don't, I'm going to give you the answer, obviously, but you need to try figuring out all for yourself. Think what kind of context you might have range signals in that are not ranges. The pullbacks. That's the most common issues you're going to go down to. These are the trades you're going to take because the signals will be there, the conditions will be met. You'll think, all right, maybe I don't understand or whatever, but the signal is there, so I need to take the trade. All right. No. Remember that anyway, context is the first step of the strategy. If you don't contextualize the range, then why the hell would you trade range conditions? All right. Remember that the pullback is not a range. The pullback is a trending step. So when you see a pullback and you misunderstand it and set it as a range, if you trade it, most likely you end up with a stop loss. Now, did you know that? How can you make the difference? Normally it's simple, all right? The pullback trades is nothing like you trade. You don't take those pullback trades. They're too difficult for you. You'll learn to process them later, all right? So that's important that you actually get it. But still, if you can at least highlight potential pullbacks, then you'll be safer dealing with the ranges. Let me explain. Like, let's get in here. Let's, goddammit, replay. All right, let's go here. All right? And let's assume that we just have gone slightly higher in here and triggered a bearish signal in there, all right? It would have been on top of resistance context, above 76% fib, and let's assume you've got a range taking profit signal in here, so it will be an absolutely valid range signal, getting in here and trading anything, any bearish signal above 12K and 509. All right? And you'd be definitely right, all right? This is definitely the kind of range trade, filling the strategy's requirements, the conditions, and stuff like that. What's the problem in here? You're dealing with a fucking pullback in here. So it's definitely not the range type of trades. In here, what's the difference between a range and a pullback? The pullback is in a trending fucking context. So how can you make the difference? Simply scroll back in time and figure out if yes or no you are dealing with a trend. In here, you simply should have seen that. Look at the fucking context being broken up. We're overcoming breakout targets. This is a freaking trend. And here is a trend breakout. All right, this is where the market broke out of trend. We broke both the resistance context and trend channel. So it's definitely the trend context that it's setting itself in here. All right. So as you are in a trending context, what's next? The trend maturity, all right? Step 1, context. Step 2, maturity. In a trending context, you have multiple trades, all right? The accumulation trade, the breakout trade, the divergence, the pullback, and the final excess, all right? This is all in the PDF manual, not have been invented yesterday, all right? So, in here, breakout. Next step could be divergence. Yes, we very likely have been divergent in here. The next one is a pullback. All right, so pullback is pulling back to the trend channel and at least 50% context. So you need to dip a toe below 50% context. That's what we've done in here. And generally, you need to be minimum, in a trending context, the conditions are minimum 23% retracement. And you need to have a trending signal, like blue signals. Right? That's exactly what we had in here. We had in blue signal, those bull pattern. I need to make a podcast with them because some people misunderstand them. They have a lifetime, right? Like these bull patterns are like background momentum patterns. They can last for 20 bars, right? So if we get the reversal afterwards, this pattern's still fine, right? So this one is great, is good. In here, you've got your range trade. Let's just see if we had 23% fib, but visually I can tell you that is. And I've just done that for the French users as well. So I know it is 23%. All right. So What do you think about it? Is this a valuable potential candidate for a pullback trade? Yes, absolutely it is. 23% retracement, pulling back to the support context. Well, normally you're fine. You've got trending early signals. So yeah, you're fine for a pullback trade. Not the kind of trade you can take. Right? You can't take those trades. They're not for you. But still, you're in a pullback context. So, are you looking for a range trade afterwards? Definitely fucking not. What you're looking forward for is this pullback to terminate and push to final excess. The final excess is going back to the resistance context, making new top, making new highs, and breaking out with frameworks. So, breaking cycles. So now let's scroll back. Oh, sorry. Let's move forward with the time and. At this point, what are you doing? Are you taking this bearish range trade? No shit, Sherlock. You shouldn't be taking those trades unless you're experienced, and you would have known in here you're still in a pullback. So all the range trades in a pullback, they're definitely way too dangerous for you. All right, what is this? Very interesting candidate for a final excess. We're breaking out of context. We've got breakout targets. Right, this could be a final excess trade. For professionals, of course. Right? So beginners don't nearly take those types of trades. All right. Didn't work. We go higher. Another final excess trade in here. Totally tradable as well. But that's the problem with reversal trades. All right. You can't take them. But do you actually care about those trades? Think about it. Do you actually care? No, you don't. All right. What is it that you care about in that type of context? Think about it for a second, be rational, right, and use tools you can control, right, things that is not subjective, right, talk about indicator. What is the next fucking step into this? The only thing you're waiting for, reaching out to the fucking support context. Because that's the first step for your forthcoming eventual range trade. You wait for the market to reverse and build the second range boundary. If this is the first one, you're looking for the second one, and you're going to try catching up the third one. All right? But anytime and anyway, the market reaches out to high highs. These are reversal trades for experimental traders, but you don't do these trades. You don't care about them, and you don't even look for them. All you look forward for is the market to build the fucking market up, so you can try catching up the range trade following it. Alright, in here, are we gonna go for new highs again? Or reaching out to the support context? Alright, another final excess. God damn it, the third one. Alright, third final excess. I'm sorry, in here the indicator done a pretty fucking good job at highlighting those trades. But still, that's a matter for professionals, all right? You don't deal with those trades. I know you might feel like, oh, God damn it, those experienced traders so great. I could make a shit ton of money trading them. All right, greed, definitely worst case scenario for beginners. Don't be greedy. Just try to make it simple and try to control what you can actually control. All right? Oh, first alert in here, you should be saying, oh, great, maybe that's the range trade I'm looking forward for. We do have ranging signals in here. All right, so that's great. We might probably build, oh, God damn it, finally pulling back to the support context. So now you know that anytime you retrace 76%, and if you are above context, here is your fucking range trade. And suddenly not there. All right, and that's exactly what happened later yesterday. All right. It requires a lot of patience to trade. I hope you understood that. Oh, not yet 76, but close to. All right, that's an interesting movement. Here we go. All right, 76% Fibonacci, breakout trades. Now that you have that, you might be, you know the trade is probably going to come over. You still can't take it, all right? Can you trade that just because we're 76% Fib, whatever? Can you just take the trade right now? That's a question you might wonder, right? No, you can't. Maybe I will take the trade early for some other reasons, and I might be going into lower time frames or whatever to risk manage. You certainly can't do that. You need to wait for price reaction. Here you get it. Just 2 candles later, all right? Here you take your trade. Candle is closed. You've got your signal. You've got your risk management. All right? What's the next step? All right, think about that. You need to have a plan. Like I told you, you want to control noise and want to control the market behaviors. Shit, it will never happen. Just let it go with that simple, stupid idea. What you can control instead is how you risk manage. So think about it. What do you control and what can you control in here? Your rules. This is the only thing you have you have a little bit of control about, because you have rules. You can either follow them or break them. As long as you'll break them, you'll destroy risk management. As long as you follow them, you'll build yourself a risk management. It's as simple as that. And this is the only thing you actually have a little bit of control about. So let's at least control your fucking rules. What are the rules for a neutral range? Validation is reaching out to the opposite trend channel boundary. All right? So you know that no matter what you've done in here, you don't nearly give a shit. All you know is that your stop loss is approximately sized by the size of the trend channel. So you've got an approximate stop loss in here. All right? Best case scenario is at least above the market top, so that's the case in here. So you get a decent stop loss, and you do shit until you get to touch the trend channel. So let's see if we can touch it. No. Alright, here we touched it and reversed the fucking trend channels. It took us a little while, so now you can actually do your first risk management. Depends on how aggressive you are, but either you do nothing, or you put the stop loss at break even, or you take 25% profit and pay for your stop loss. Anyway, alright, so that's it. Alright, I personally will do shit. Or put the stop loss, or just narrow the stop loss right above the market top. That's what I would do because I'm a very aggressive trader. But depending on what your profile is, then you should do accordingly. All right. So in here, your trade is just validated. Next step is either invalidation or confirmation, which is reaching out 50% context channel with candle close. So that's exactly what we're dealing with right now. All right. Here we are, real-time market conditions. And what we're dealing with in here is the 50% context channel. So far, have we made a single candle close below it? No way. So we're still dealing between a binary choice. Invalidation, which means we accelerate back and make new highs, or confirmation, we get to close below those levels, and we'll finally be able to confirm this fucking trade, which means another risk management, taking profits, stop loss at break-evens and stuff like that. All right? I hope you do understand how this thing works. This is the only thing you can have control. Build yourself a set of rules, or when you're a beginner, the easiest way is to pick up someone else's set of rules, preferably a professional trader, and then you get to learn how those rules works. You get to learn all those contexts one by one. First the range, then you're going to take the trending ranges, and then you're going to start looking for trend, in which you're going to be able to trade breakouts, then accumulation, then divergence, then the pullback, then the final excess, which is the freaking reverse trade. And the trading final excesses is the hardest thing to deal with. All right? These are the reversal trades. Like I said, they require a shit ton of knowledge. So if you want to catch those trades, just be fucking rational. Even I, with a lot more experience than you do, at least most of you do, I can hardly figure out a reversal to be certain. There's no certainty. These trades are freakingly risky. And that's how it is. I mean, don't try to go too much difficulty. Just try to make things easy and understandable. At least with a set of rules you can manage, you can learn them and trade them safely. Like I told you regarding the range trade, it's easy to understand and teach and learn the rules. What's important in here is that you make sure you don't deal with a pullback context. How do you do this? You make sure you're not just trading right after the bullish breakout or bearish breakout. All right, it's simple as that. If you are trying to range trade right after a breakout, you're very likely dealing with a pullback trade, and that certainly isn't a context ranging context. That is an intermediate trend context, and certainly not something you want to trigger your trades into. But you need to be aware that these are the conditions in which these are the contexts in which your conditions, your usual range conditions, will likely be met. But you can't take the trades in this context. Otherwise, very likely going to end up with a stop loss. And if you understand that making money in trading doesn't necessarily go along applying the rules, but mostly learning where not to apply the rules, then you start to understand how risk management works. You don't control shit. What you control is that you know how to apply your rules, you know where not to apply them, and this is how a trader works. We've all learned those contexts, we've all made mistakes with those contexts, and we learned how not to replicate them. By simply understanding what were the inappropriate contexts and dealing with them. When we have inappropriate context, we simply don't trigger the trade. But if I simply give you the rules, then you're going to see range trade, like not everywhere, but you're going to see trades into contexts that are definitely not meant to be traded with them. Alright, so I hope today you've been learning something, like learning the range trade rules. That's freakingly simple. I hope you really got that by now. But you need to understand that there are some contexts in which those trades will certainly not be profitable. These are the contexts in which pullbacks will trigger range trade signals that you must avoid. Alright, that being said, I'm going to leave you guys with that today. Learn to highlight your trades. Oh, sorry, I'm going to give you another early range trade I'm looking forward for. Alright, so just as a quick reminder, when you see me dealing with reversal trades, alright, you know that you have a range trade coming right after. Not necessarily immediately after, but you need to know something, alright? In here is the kind of market I want to deal with a reversal, alright? That's exactly the signal I took yesterday, so I'm taking that reversal trade, which means, what's your deal? As range traders, alright? You wait. For context, you want to see this context reversing bearish. Obviously, it's not just getting in here and getting bullish, because if we do it fast, then this context channel will not reverse. So we need to reverse it, pull back with a reversed context channel, and you need to catch this trade at 76% Fibonacci retracement. You know the drill. So there is a forthcoming range trade if we can freaking reverse out of here. I'm totally aware that this trade is risky, all right, and that Apple could very well make another little excess today or whatever. That's a risk you don't have to face. That's a risk reversal traders have to face. Though I have a risk management, I'm certainly not having a stop loss in here, right? I'm not stupid. So you wait for these potential reversals to trigger. How do you know it's been triggered? Simply if the market reverses to the trend channel, to the context channel. Though that's what you do now. You wait for market to reverse in here, and if it does, you try to catch the pullback trade that may probably show up right after. The range trade is far less risky than the reversal trade. It also comes with far less money to make with. I'm simply explaining this because you really need to understand. If I take this trade, what the hell do you think I'm going to be dealing with when we'll get to reverse the context? Do you really think I'm going to profit take? No. Well, eventually I'm going to 25% profit take to pay for my stop loss. All right? And that's it. Once I've paid for my stop loss, I'm going to keep this trade. But do you really think I'm not going to take this trade as well? I'm taking it. Like, I take the range trades as well, which means instead of having just one tiny position size trade, because the difference is when you get in here, you're going to have to pay for this type of stop loss. I'm not. I'm going to put a tighter stop loss because mine has been paid by the previous gain. And by getting in here, I have two positions, though more bearish exposition than you do, with the same risk taking. I'm never taking more than 1% risk on capital, just like you will. It's just that I'm taking multiple areas of risk, multiple trades, and when the things actually get to trigger, I'm of course going to risk manage in here and breakout trade. So I take 1, 2, 3 on the accumulation, 4 on the breakouts. Though I can have 4 trades when you guys will have just 1. And moreover, you're going to have to profit take that trade in here. I will simply partial profit take it. So you need to understand that when a trend triggers and when I manage to get this trade out from the reversal trade to the pullback to the accumulation to the breakout, this is how I can make a lot more money than you do. But what do you think it comes along with? Like I said, more money means more risk. But what's the difference between you and me? I know how to handle all the risks surrounding all those contexts. The reversal, the reverse, the pullback, the accumulation, the breakout. I manage all those trades. I risk manage them because I know how to deal with them. I have control over those patterns. But I don't control the market. I control the patterns. That's simple as that. all right? You certainly do not control all those patterns, and that's your final goal, the things you'll reach out to into a distant future. Certainly not tomorrow, certainly not in a couple months. This takes years to figure out all those contexts. But you need to start with something. And like I told you, these are the things you feel like you have to learn, but you need to learn these ones. These are the ones you can control. All right? That's it. I know you're seeking for those reversal trades. I know how dare and damn it you want to learn them. But that's the final thing you're going to learn. That's the last step of a trader's coaching, learning the reversal trades. But they certainly doesn't go with the beginners. And I know you want them, but certainly not need them. What you need is mostly what you don't want. And what you need and what you want is most certainly what you don't need. All right? And understand that misconceptions, those types of misconceptions, and you'll probably understand why there are so much losers in trading. Simply because people want to look for easy, controllable solutions that are just false friend. There's no such thing into trading. Anyway, that's good. That's it for today. I hope you've learned a couple stuff. At least I hope that you'll finally get to not take those freaking range trades into pullback context, because no matter how hard you try, right, if you just follow a set of rules blindly without contextualizing them, then you're probably ending up with problems. All right. Every pattern comes with a risk management. The best risk management is, more than anything else, learning in which context your signals shouldn't apply. Regarding the range trade, the pullback is your worst enemy. Just make sure you're not in a pullback context, and you're certainly going to limit most of your losses with the range trades. That being said, bye guys. See you later.